This is kind of like the perfect spot, right? It's kind of like the perfect spot. It is. It's kind of like fucking perfect. It's ridiculous. We'll put that on the page. Fuck you. I ain't fucking. Fuck you, right? Fuck you. Unbelievable. All right. I think yeah. I was just trying to get some shit going here. Um so I marked off a few levels here on the ES. You're looking at um 48.23 today, which is a point of control from back on the 20th. Also, S1 47.89. Also, another one around 47.96 was a point of control from back on the 18th. Other than that, we're kind of chopping around in this middle spot. Let me get rid of this. And that's kind of the state of things. Got a couple of points of control in here. I'm not going to really mess around with those today. I expect this to be kind of a chop fest, and also expecting quite a bit of low volume, very, very unconvincing trade today. That's really about the size of it on the ES. Not really looking at much else. I think the story of the day, perhaps, well, I don't know if it's the story of the day, but the news is making it out to be the story of the day. I don't know why. Now that I'm looking at it and I hear it on the news, they're like, wow, natural gas and blah, blah. I'm like, okay, that's really not that. I mean, it's down 5%, but it's not horrifying. I mean, I expected to see it and us be totally cratering, but I don't know. It's a big move, no question about it. It's a big contract, but the effing news, my God, they make everything out to be, whatever. But anyway, natural gas down 5%. I would assume that is probably the news of the day because it's just moved so much. Nothing to say there. I wouldn't get long natural gas. I wouldn't get short natural gas. Bonds continue to impress. I think we're kind of due for a little Dewey Wackham and Howe on bonds. And so I'm sitting tight, although I'm longer term bullish on bonds. I'm going to look left here a little bit. And in looking left, we do seem to be getting very, very toppy. Very toppy. And with that being the case, I would be very careful at adding to longs here. Definitely add to longs on pullbacks. No real specific spots here, but I would like us to get back and retrace these 120, these low 123, one high 122 levels. I think that is actually as good a spot as any as you're going to get before these bonds make another leg higher. That's all I have to say about that. Getting into more some of the metals, and I don't actually trade it very much, but I am looking at gold, and gold, in my opinion, at this point, appears to be really, really kind of running out of steam. Now, I know as soon as I say it's running out of steam here, it's probably going to rip everybody's face off. But it does, I guess if there's a word, it looks tired. Again, in my opinion, I just, it resembles a very tired trade that gold normally goes through after it has a big move up like this. You can see just looking back over the last year, even, and then when you actually look left, and we really have not, if you actually go back, we're really kind of back to where we were, what, a year and a half ago or so? Day. Or is it 5 year? We'll go 5 year. Where's all my other time frames? Where the hell are all my other time frames? What the freak is going on here? Do the weekly. And we are kind of like, no, we are all time. Like, yeah, we are. I didn't even realize that. See that? I don't even follow what an idiot I sound like, but it does look tired. I mean, look, it's having a really rough time up here, kind of making another leg higher. Now, does it continue? I don't know, right? Stuff can go be irrational longer than you can be liquid, but I mean, in my opinion, I just don't. I just don't know if it has the catalyst to be able to get up and out and continue to make new highs without a little Dewey Wackerman Howe. And what I might do in gold is I may actually do a little condor trade. It's kind of a cheap way. And what a condor is it's actually two spreads. You're buying a put spread and you're selling a put spread, but you're doing it all in the same expiry. So it's not like it's this laddered type of thing, or like you're not selling premium and all this other stuff. So I'm actually going to bring up Tasty Works. Is it Tasty Works or Tasty Trade? What do they call themselves nowadays? I don't even fucking know. I don't even know. Um, so yeah, so that's kind of how I'm going to play that there. And then these condors are really cool trades because it's kind of like a really cheap way to get directional over time and kind of not break the bank, which is always a good thing. Hmm. Right. Okay. Right. All right. Gold. All right. Gold. We get the spot, but gold. GLD, and that's how we're going to do gold. And these condors are short term. So usually you want to do these inside to 30 days. You don't want to be out longer than, a couple of weeks on these because they're just not designed to be a longer term trade. But the way they work is that, so what we're going to do, and you normally go outside and usually do out of the money stuff. And so what I'm going to do is I'm going to do a 190, 188, 186, 183. Now you could see that this is a really, now I don't have a very high probability in this trade, right? Because I'm basically looking for this thing to fall and pretty much land at or around 189 to 184, 183 in the next week and a half or so. I'm only going to spend 160, 130 bucks on this. My max profit's 163, but if I do this, now buying power is 137. Really, realistically, I'm only spending 37 cents. But so with the thing about this trade now, if you look at this on the curve, and we're going to have to zoom out a little bit, you will see what the frick is going on here. And then you do the analysis, and then you can see where the break even is, right? You're looking for this band. And then if you want to change this, right, you want to change the trajectory of this, you just widen this out a little bit. So maybe you move this down a little bit here, you move this up, right? You can see how you can kind of play with it. I kind of like the 184 though. And now I'm not going to be able to find it because this thing sucks. Needless to say, 186. Needless to say, that's kind of how this works. And then you're just not, the thing about it is you're not risking a lot of money. You're not risking a lot of money in it. Purely directional. Doesn't have a high probability, but again, you're just looking to take a shot on this, not spend a lot of money, and then kind of, so you don't break the bank. And so that's why I like that trade. Or any trade like this right now, actually, to me, is a good thing to do in gold. Like, because it's real easy to just say, yeah, gold's going to go higher. And to me, it's just, again, it's like an overdone, because eventually it's going to have a Dewey Wackerman Howe moment. There's no question about it. And you want to be close to at the money as possible, because at 190, you want to kind of time it so that this thing, when it does fall, that your strikes kind of come in, and you want them to be in the money. If you go too far out, so like say if I do like a 188 or even a 187, the deltas really aren't there. So this thing's really got to get a collapse. And that's a big, for this to go 190 to like 186, even 187, that's a big move. That's a pretty big move. So anyway, Condor, nice cheap way to kind of get short gold and play it that way, purely directional, nothing fundamental other than just, technically it's probably overbought. I haven't really looked at it on an RSI or anything like that. I don't really use those anyway. But you can just see from a price point of view, it's, near all-time highs again, other than this one wick, this wickety wick that just goes all the way up to like what, 2150? We are, banging on the door again. And does it have enough catalyst to make another new high? I don't know. So that's that. Let's flip the script now and move over into a crude. Crude has been showing an enormous amount of, and let's go into the 1 hour, enormous amount of rebounding here over the last few trading sessions, mainly like last week and a half, 2 weeks before Christmas. Here is actually a really nice reversal in crude oil, and a lot of which has been coming out of the geopolitical stuff going on in the Suez and the Red Sea, with there being, few Arab nations had said they're not going to be sending oil through there. A couple other countries said that they weren't going to send oil through there. And so kind of have that going on, and that has kind of fueled this recovery in crude oil. So if I'm looking at some levels today, I'm going to be looking up here well above R3, 75.57 at 76.13. I'm not going to take R3 today. Don't like where it kind of falls. There's a lot of momentum here in crude that I really believe it. If it does get any mojo, it's going to have no problem blowing through 75.57. And if anything, and if it gets exhausted, it will probably be somewhere up at 76. And I really like this 76.15, not only because it's a point of control, it's literally right above this big, huge band of selling where you have all this red delta up here. Looking back, early in December, we have these swing highs here that it was not able to, on its way down, it was not able to break back up in there. So I think you're going to see some serious resistance up there, at least for a short-term short up there. So I do like 76.13. As far as downside, I don't even know if I even buy anything on the downside today. I think if it actually reverses, it may not be anything worth a trade, in my opinion. So in other words, even if we do back down to, like, say, even the pivot or one of these points of control, I don't know if there'd be enough momentum out there or interest for it to bounce with any significance. Might just chop around and just kind of die there for the rest of the day. So to me, that's kind of the trade in crude. If we get, if or when we get up there, that's going to be the spot. So I'm going to be watching that all day. That's going to be my trade of the day if it turns out. So there you have it with crude. Then obviously, look, you can trade any of these levels if you want, right? There's nothing ever wrong with that, trading the pivots. I just don't see any other, again, holiday trade still, so I am not touching it. Soybeans have been suck. They have been really suck. However, I think we are getting to a spot in soybeans here where you can literally draw a line in the sand or wherever you want. I want sand or wherever. I kind of like this area down here for a retrost 1295. If we get back there, I kind of like that spot. I have it marked already. You can see I already have alerts in there, have not gone off. Now to the upside, you really got to like this 1323.50. You got to like it because I'm telling you to like it, but you got to like it because you have an enormous amount of points of control all over the place in here just in the last few weeks. I'm counting literally 1, 2, 3, 4 in this area. Huge amount of red delta up and above there. Like literally, this is almost kind of smack in the middle, but you have a huge amount of red delta in here that you are going to get a pullback. Now, whether it's a big move or not, and it's a retrace all the way back down to those 12.95s, I don't know. But, I have to take almost just from trying to be an automatic, I have got to take this trade. Now, that's a big move today. I doubt we get there unless something happens like a cargo ship with, 15 million tons of soybeans kind of hits an iceberg or something. I don't think we get there. That is a pretty big move today. We could possibly get here this week, though. And that's 1323. 2023. Okay, but we could possibly get there this week. All right. And other than that, again, we have that spot 1295, 1323, and that's really about it. I would stay away from a lot of this today. Now, look, if you want to give R1 a shot today, as like, if we do get up there, it's definitely not a bad trade, I think. As again, I don't think it's as high probability as the 1323, but I'm going to call it a quick hitter, and you're really looking for something today, that's really not too bad of a spot to short. But the way you would get short up here, I would use a really, really tight stop. To me, like I'm looking at maybe 6 ticks, maybe even 5. Yes, maybe even 5. And then, you just go for a quick hitter. So you're in at 5 ticks, you're risking what, 62.50, $75, and then only look for like 6 to 8 ticks to the other way. And again, you're just looking for a quick hitter. You're not looking for a big pullback there. But that one could actually turn out to be a pretty nice trade today. Again, just for a quick hitter, a quick $100, depending if you do how many contracts you do, 125 bucks. I think you get that today. And that's 1316. Excuse me, 1312 on the R1, 1312. Um, if we even get there, even if it's very slow, choppy trade. Also, R2, really interesting spot as well. You could see we were not able to break up and above that last week in those trading sessions, and we're sitting right above there. A lot of red delta in here. I do like R1, though, better. The reason I like the R1 is because of this point of control here right below it. Okay, and so that's really it as far as the futures markets and what have you. And then to reiterate, Nike, I did take that trade, and it didn't work. I did take that fade trade. I didn't get it. I sold the puts. I tried to sell the puts. I tried to sell the puts, and I never got it. Never went through. And it actually did bounce. It went from 107 pre-market as soon as the market went up to 109. And I would have actually done pretty well, but I couldn't get anybody to fill it. So, needless to say, that is kind of where that's at. So that's all I got today. Pretty quick one. We went about what 25 minutes, and we will be back tomorrow.